Hi girls. So let's see the next illustration in chapter 4, and that is illustration number 7. Okay, so let me read the details of the problem for you. Mr. Lakshman supplied goods from Karnataka to Chennai and its value is rupees 10,000. So this is out of the state. Obviously it will be considered for IGST. Okay, the value of goods supplied by him within the state is 1,10,000. So the value of receipt of goods within the state is rupees 10,000. And the value of goods received from Chennai is rupees 90,000. So if IGST rate is 18%, SGST and CGST rate is 9% each, calculate the net GST payable. Okay, so let us quickly look into certain details in this problem. So again, as usual, you have to calculate your net GST payable in this problem as well. So according to the formula, the format, how is it calculated? It is calculated by first of all computing your output tax payable, and then from that you have to reduce your input tax credit. Okay, and then you have to set off that and pay off your output tax payable amount, and then whatever is the remaining amount will be the net GST payable. Alright, so the detailing given in this problem is so you have to first of all calculate your output tax payable amount. Okay, so in order to calculate your output tax payable amount, what is that you have to consider is you have to consider your outputs. So nothing but what you are supplying, what you are selling. So in this problem, it is clearly given that Mr. Lakshman has supplied goods from Karnataka to Chennai and its value is 10,000. That means he has sold IGST worth rupees 10,000. At the same time, the value of goods supplied by him within the state is 1,10,000. So you have to calculate your output tax payable on these two amounts, 10,000 and 1,10,000. So firstly, to calculate your output tax payable, the solution goes this way. You have to first of all calculate your output tax payable. So you have 4 columns: CGST, SGST, IGST and the total column. So first of all, you calculate your output tax payable amount. So considering CGST and SGST, you will consider the goods that which is sold within the state. So the goods that which is sold within the state is worth rupees 1,10,000. And what is the GST rate that which is given? The GST rate that which is given is 9% each for both CGST and SGST. So 1,10,000 into 9% will be 9,900. Similarly, for your SGST as well, it is 1,10,000 into 9%, 9 by 100, it is 9,900. So now the amount of IGST, that is whatever is the goods supplied outside the state, differs. So that is worth rupees 10,000. So 10,000 into what is the percentage given? It is given as 18%. So 18 divided by 100, and that will go to the IGST column, that is 1,800. Now, in order to calculate your total output tax payable, you have to add these three amounts. 9,900 plus 9,900 plus 1,800 is equal to 21,600. So you are taking this to the total column. Alright, so now our next step is to calculate the input tax credit. So for input tax credit, they've also given you the amounts. So you can see that the value of receipt of goods within the state is rupees 10,000. And the value of goods received from Chennai, that is out of the state, is rupees 90,000. So you can, how do you say it is out of the state? Because the Lakshman, this particular Lakshman is supplying goods from Karnataka to Chennai. So he is in Karnataka, so he is supplying to Chennai. So obviously this is going to be an interstate transaction. So you can calculate now, first of all, the input tax credit on CGST and SGST. So within the state it is only 10,000 rupees. So 10,000 into 9 divided by 100. So the rate is already given 9% each. So you are also going to calculate your input tax credit on the same percentage. So 10,000 into 9 divided by 100. And then SGST is 10,000 into 9 divided by 100 again. And now IGST is 90,000 into 18 divided by 100. So based on whatever is the answer that you're getting, the total of all this amount is 18,000. Alright, so how is the calculation done now? It is, here you can clearly see 10,000 into 9 divided by 100 is 900. Again 10,000 into 9 divided by 100 is another 900, and 90,000 into 9 divided by 100 is equal to 16,200. So the total of 16,200 plus 900 plus 900 is equal to 18,000. Okay, so this is your total input tax credit. So this input tax credit you have to set off. Okay, so firstly, if you take into consideration the total column, 21,600 into 18, minus 18,000, it will be 3,600. So this is your tallying amount. Okay, so firstly what you will do, you will take this amount and set off all your taxes. You will pay your taxes. Okay, so output tax payable. So 18,000 minus 1,800. Okay, so you will first pay off your total IGST. So if you set off fully, it's going to be nil. Okay, so in 18,000, if you minus 1,800, the balance amount will be 16,200. So take that 16,200 and set off your next tax, that is CGST. So from 16,200, if you minus 9,900, you are left with 6,300. Okay, so 9,900 fully is set off, so you will be having balance nil. Alright, so now remaining amount will be 6,300, that's it. But your output tax payable for SGST is 9,900. That means if you pay off to the extent of 6,300, you are still left with 3,600 balance payable. So this becomes your balance. This becomes your balance payable tax. Okay, so balance payable is going to be 3,600. Understood? So this is going to be your net GST payable. After setting off your IGST and CGST, your SGST also is set off to an extent, but the balance is 3,600, which you have to pay and clear off your net GST payable. Yes, hope you understood the problem. If you have any doubts, girls, you can always get back to me for any clarifications. Thank you.